Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look in the gold market. So actually, as you could see on performance on intraday charts, the marking the sign that we have decided to use for identification of the bearish sentiment has been broken. So we talked about the XOP and said, let's take a look what will happen, where the market will be able to show the bounce. As the head minutes have been rather hawkish, and you could see what's going on the interest rate yields. It's just keep climbing higher, and I think that this top will be challenged very soon. So overall performance stands really fast. Market shows almost no retracements since 2020, very small pullbacks, barely the 30% of the most recent swings right there, but not even 30% for the major swing. And since market already is moving above the 127 extension of this butterfly, as you can see, it's coming to the 1618, which is around 5%. It's not really fast. It's a long-term story because this is monthly chart, but with this dynamic, it definitely will make some pressure on the gold. Now everything will depend on the inflation. If it will accelerate as we suggest, and real yield will turn negative once again, the gold could get additional boost despite that interest rate is rising. But since currently, as you can see, we actually have some discrete numbers on the CPI, but we have the constant numbers, regular numbers on the yields. And in the current situation, since online information on interest rates shows us that yields are rising, so it's well, makes some bearish pressure on the gold, just because we see in real time that rates are rising, nominal rates, but inflation by the CPI for the July stands low, and that, as we said, will press and now is pressing on the gold market. So from that standpoint, currently probably we could say that confluence has been broken, just because market actually right now is challenging these lows. That was response on this confluence, and nearest destination point will be around 1865, 1867, which is 127 extension of this swing up, and also this is COP. Take a look how gradual the ABCD pattern, the speed almost equal of the BC and the CD and the AB legs. So that's where we are going. So on the 4-hour time frame chart, you could see what has happened with the XOP. Yes, very small reaction has happened. No patterns have been formed, and market just collapsed. From that standpoint, now it will be a bit psychologically difficult to make the decision on the position taken, which is because you do not have any clear and really reliable patterns. It's very difficult to make the decision and take position when you have this choppy side of action. But we have actually no choice, and if you would like to take the position on the gold, you should use near standing resistance levels for making decision that's more or less agrees with the trend line. So currently it seems that nearly around 1897, 19 even, it might be interesting for position taking if market will show some minor ABCD pattern here. Probably we could return back to using of the hourly chart, as will be a bit more comfortable in the current circumstances. So some kind of the ABCD pattern here, giving us Gartner's triple to, well, makes sense to consider. As usual, when we trade the channels and minor patterns that are forming inside of it, our major risk factor that we need to keep an eye on, and actually the moment that could tell us that this party is over, is the forming on the reversal swing. That's why you do not need to place too far stops. You could place it somewhere above this area or above this top, because if market will start forming a reversal swing here, breaking the channel and moving above the previous top, this tells us that this tendency is over, and you have to calculate your risk reward and lot of the trading lot depending on the risk that you will take, and depending on where you will intend to take the position. So if this risk is too much for you, then you need to wait for some another trading stop, or trying to wait for higher standing level. Maybe market will show some more extended performance that will be acceptable for your risk management. So that's the moment you need to control, because here, just remember the one thing, that when we trade the channels, forming reversal swing to the upside means the party is, while market forming the tendency of the low lows and low highs, everything stands as it should be. So that's the thing that we will control. So currently, as I said, market is testing the first fib level, but maybe it will try to show some kind of the ABCD retracement and provide us with a better entry point. So we're not considering right now any pullbacks anymore, just because recent reaction on the XOP shows that market is too weak and not able currently to show any more or less meaningless retracement.